Friends, the first and biggest news comes from the aviation sector. The Ministry of Civil Aviation has officially ordered IndiGo Airlines to cut their winter schedule by 10%. This matter has now become quite serious. Initially, the DGCA had only given an advisory to cut flights by 5%, but now the ministry has issued a direct order increasing the cut to 10%. If we look at the numbers, IndiGo operates about 2,200 to 2,300 flights daily. This means they will now have to cancel approximately 216 to 230 flights every day. And what is the reason for this? The biggest reason is pilot shortage. According to the new FDTL rule, pilots require more rest, and the IndiGo does not have enough pilots to manage this new roster. The second reason is the North Indian fog. The government has realized that there will be delays during the fog season, and IndiGo does not have enough staff to manage it without chaos. We saw last week how the airline cancelled over 2,000 flights, leaving thousands of passengers stranded and causing complete pandemonium at airports. To talking about the impact, the airline has so far processed refunds worth 745 crore for cancelled tickets. This is a significantly financial blow. The government has asked other airlines, such as Air India, to add extra flights to compensate for the shortage. However, there is a fear of ticket price rising due to high demand and low supply. This is important news for investors. IndiGo's shares will remain in focus as this order will directly hit their peak winter season revenue. So here is the next news, as you can see on the screen. The next news is from Adani Green Energy. French energy giant TotalEnergies is now going to sell its 1.5% stake, about 2.47 crore shares in the company through a block deal. The floor price of this deal has been set at rupees 970 per share. If compared to the current market price, which is around 1012 to 1020, the deal is happening at a slight discount. The estimated value of this entire deal is approximately 2,400 crore, which is nearly $285 million. And why is this Total Energy doing this? They invested at a very low valuation in 2021. The $2.5 billion investment has now grown to $8 billion. So they are merely doing some profit booking. This is not an exit. TotalEnergies still hold a large stake of about 18 to 19%, and they have stated that they are committed to the partnership. This is just a financial move to pull out some money. What will be the effect on the share price? With such a large supply hitting the market, the price may fall in the short term. However, because the seller, that is the TotalEnergies, is a long-term partner, the sentiment can stabilize quickly. Alright, moving to the third news of this video. The third piece of news is from Anand Rathi Wealth. The company's key promoter Anand Rathi has sold a large portion of his holding in the market. He has sold shares worth a total of approximately 560 crore. In terms of quantity, around 19 lakh shares, that 1.9 million, were sold in the market. The average selling price was approximately 2,950 per share. But who were the buyers? The buyers include large domestic and international institutional investors. This shows that despite the promoters selling, big players have confidence in the stock. Big names such as Kotak Mahindra Mutual Fund, Invesco Mutual Fund, and Morgan Stanley Asia are included in the list of buyers. It is important to understand the context. Anand Rathi Wealth has given a return of more than 800% since its IPO. It has been a top performing stock. After such a big rally, it is normal for promoters to take out some money. It's called diversification. However, the good thing is that the supply was absorbed by high quality funds, which is a positive sign for minority shareholders.